Predicate offences. Definition and scope of predicate offences under the AML-CFT law. The AML-CFT law establishes a comprehensive framework for identifying predicate offences, which are crimes that serve as the basis for money laundering activities. The definition and implications of predicate offences are outlined as follows. Definition of predicate offence. 1. Legal definition. A predicate offence is defined as any act constituting an offence or misdemeanor under the applicable laws of the state, whether this act is committed inside or outside the state, when such act is punishable in both countries. This means that any crime, whether classified as a felony or a misdemeanor, that is punishable under UAE law qualifies as a predicate offence, irrespective of whether it occurs within the UAE or in another jurisdiction where it is also deemed a criminal offence. 2. Scope of predicate offences. The definition encompasses a wide range of criminal activities, covering both felonies and misdemeanors, provided they are punishable under UAE law. This broad scope ensures that money laundering can be prosecuted even if the underlying crime is committed outside the UAE but is recognized as a crime in both the UAE and the country of occurrence. Categories of predicate offences. 1. FATF categories. The Financial Action Task Force, FATF, has identified 21 specific categories of predicate offences. These categories are criminalized within the UAE's legislative framework, serving as a guide for financial institutions, FIs, and other entities in understanding potential risks associated with money laundering. 2. Non-exhaustive list. It is important to note that the FATF list is not exhaustive. The AML-CFT law in the UAE stipulates that even crimes not included in the FATF's 21 categories, whether felonies or misdemeanors, can be considered predicate offences for money laundering. Top threats identified in the UAE. 1. High threats. Fraud includes various forms of deception aimed at financial gain. Counterfeiting and piracy involves the production and distribution of fake goods and intellectual property violations. Illicit trafficking in narcotic drugs and psychotropic substances concerns the illegal trade of controlled substances. Professional third-party money laundering involves professionals facilitating money laundering for clients. 2. Medium-high threats. Insider trading and market manipulation includes illegal activities that distort financial markets. Robbery and theft involves the unlawful taking of property. Illicit trafficking in stolen goods covers the illegal trade of stolen property. Forgery includes the falsification of documents or signatures. Smuggling encompasses illegal transportation of goods, including customs and excise duties evasion. Tax crimes related to evasion of both direct and indirect taxes. Terrorism and terrorist financing involves the financial support of terrorism activities. Risk assessment for financial institutions. 1. Special attention to high threats. Financial institutions are advised to pay special attention to the most serious threats identified in the National Risk Assessment, NRA, and any recent risk assessments. This focus is crucial for identifying and mitigating the risks associated with money laundering. 2. Comprehensive risk assessment. While prioritizing high threats, FIs must also consider all categories of risk in their own MLFT business risk assessments. This ensures a thorough evaluation of potential risks specific to their operational circumstances.